Chainlink / US dollar. First off, read this disclaimer carefully. And of course, remember, like, subscribe, share, and comment, because it does all kinds of magical things for you as a subscriber. Okay, we are going to look at the crypto business in this video. We will actually look at one of the, well, it is popular, but it is not like in, the top biggest, but big, Chainlink / US dollar. Your smart contracts connected to real-world data, events, and payments. Chainlink network provides reliable, tamper-proof inputs and outputs for complex smart contracts on any blockchain. Here you can see some info about it. Let's just read through this. Smart contracts provide the ability to execute tamper-proof digital agreements, which are considered highly secure and highly reliable. In order to maintain a contract's overall reliability, the inputs and outputs that contract relies on also need to be secure. Chainlink has been rallying quite big time as of late due to some good news. Okay, let's now look at the seasonality for Chainlink / US dollar. You can see that we are currently in July. August and September are weak, but we don't have that much data. Let's compare it against the S&P 500. Okay, like that. Yeah, you can see that there is this general underperformance in this period, but Chainlink tends to outperform in October. But then again, November is horrific, hence it's like you shouldn't read that much into October here. Let's first look at the charts. This is the investing.com Chainlink index. Chainlink, it's been massively outperforming the Bitcoin. It's been breaking out to a new all-time high, 1,462% gain within this time frame. Pretty darn good. Okay, so it's quite clear here that the bulls, they are in control. Given the history of this pair, it is clear that there's been there's been multiple explosive rallies in the past. The general trend is that after a major rally, there is a pullback. Which begs the question, is there, a high probability of a pullback here? This rally looks a bit similar to this one and this one. And this one as well, actually. You see that the trend is rally, pullback, rally. Rally, pullback, rally. Rally, pullback, rally, and then a sell-off. Rally, pullback, rally, sell-off. Okay, there could be more upside, but we are very far away from any support level, hence I would not be surprised to see a pullback. The RSI is also very stretched on the weeklies, 82. The accumulation distribution line is, however, corroborating the rally. There is interest. Looking at the daily data points here, we are very far away from many key moving averages. We are overbought. Not shocking to see a pullback. We are seeing a bit now, hence, yeah, it makes sense to cool down a bit. And that is the general rhythm of this pair. The correlation with S&P 500 is actually quite strong, 75%. Both the S&P 500 and Chainlink are arguably risk-on investments. Okay, that's some of the charts. Here are some news about the Chainlink. Dubious asset manager claims to short Chainlink with a 99% target. Well, 99% target is a bit stretched, but, I would expect, a pullback here. That is the general trend. So we have a bear here. Is Chainlink a bubble? On-chain data, DeFi suggests otherwise. Well, not necessarily like a bubble. Let's see if this site has any news about why we did see this massive rally. Okay. Link, an altcoin powered on Chainlink's decentralized network, is smashing Bitcoin and many other fast-growing digital coins in terms of rate at which it has been appreciating in dollar terms lately. Wow, that's a very cumbersome way to write. Let's see, data from blah, blah, blah shows the most valid platform since yeah, it would be nice to get some clear news here about the rally. Okay, here it is. Chainlink demand is boosted by DeFi. While Chainlink's on-chain activity and an increasing number of nodes point to healthy growth in the network, other forces may be at play. For example, there has been growing demand for DeFi-enabled coins like Link, as it provides some of the highest interest for yield farmers cultivating interest on protocols like Aave. As the DeFi sector continues to grow, so does the need for reliant and decentralized oracles that can provide outside information to smart contracts. This allows DeFi applications like insurance and gambling to be safer and trustless. So that's basically my take here on Link. It's obviously in an uptrend, but I would expect a pullback based on literally all of the history here. Okay, let's look at some other markets. Let's look at some stocks. Let's look at Netflix for Netflix. So Netflix, it had this monster rally, and now we are seeing that pullback that I expected. And this was a pullback I expected, also based on the history. If you look at the long-term history here for Netflix, it has rallies, but it also has meaningful corrections. We were very, very due a correction. Okay, let's look at Marathon Oil, MRO. Okay, so this is in a business that's definitively in a downtrend. Fossil fuels is a hated industry, and it's not good to be in a hated industry, obviously. But how far do we have to go back? So we are currently back at levels from 2002. So a lot of bad news are priced into Marathon Oil. So like the contrarian could make you think like, okay, maybe I should view this as a more speculative bullish opportunity, because you do also have support levels way back here. It has corrected a lot, okay. You could make that case. But the long-term picture for this industry is just not good. The green energy companies simply have too much momentum behind them, and they are becoming more and more of a viable alternative. It's important to bear in mind that fossil fuels, if you take oil and gas, this is sun energy that has been stored in a liquid form. So that's the key thing here, okay? So it is, a kind of solar energy. Obviously, it isn't categorized as a sun energy, but the energy does originate from the sun. Hence, if you make a bullish case for oil being a good source of energy, you are also making a strong case for solar energy, because yes, it comes from the sun, ultimately. And there is talk about not simply, solar panels, but there are some theories into how you can make like sun gel, that you can store the sun energy in some kind of gel-like format that is fossil fuels, fossil-free, that is carbon-free, carbon neutral. And so basically like some kind of clean liquid energy alternative to oil. So basically I'm very bullish on solar energy and bearish on fossil fuels. We have time for some other S&P 500 companies. Let's look at this one, AT&T. Now we are in the telecommunications business. Definitively a chart with a bunch of cycle, rise, decline, and so on and so forth. We have had a declining cycle, could be a rising cycle on the horizon. We have pulled back to some key support levels. The bulls have not really shown anything yet, so be a bit cautious. The reason why you could make a highly speculative bullish case for AT&T is because one thing, it's a dividend stock. Another thing is that we are seeing rotation in the market. So a bunch of stocks have gone up a lot, especially the Nasdaq-ish stocks. Huge moves, but they have become like ridiculously overbought. PEs have just exploded. Hence, we are seeing a rotation into more value. And AT&T at this level here is certainly a lot more value than those stocks. And there are many players in the stock market that have to buy. Like mutual fund managers, they have to buy, they cannot short. Hence, they will sell their overvalued positions and buy the undervalued. AT&T, it is interesting at these levels, but I would like to see the bulls maybe fight a bit more vigorously before I turn bullish, because we do have this 20-week moving average here as resistance. Yeah, but we are seeing this accumulation distribution line increasing here. Okay, so there are some buyers here, and this move here could very well be mutual funds with a lot of money. Let's look at Apple. Apple, yeah, I mean, look at this move. So from this level here to where we are now, 41,782%. That's a bullish move. However, the trend of the stock is rally and pullback. We have had this monster rally. We did see a bit of exhaustion this week, hence, you know, I mean, the thing's that, okay, long term I am bullish on Apple, but, okay, if you are shorting Apple at this point, how much upside are you risking, you know? You gotta ask yourself the question. So would you be more comfortable buying here, or would you be comfortable shorting? I think a lot of people would be like, okay, maybe not buy here. This is just a lot in a short time. There's been some very good shorting opportunities before, hence I would feel more comfortable being short Apple at this point and this level. Also, of course, Apple, they've become a bit greedy lately. They're going to not ship the charging cable with the phones, which is like, Apple is very, very greedy. And they're playing with fire, because they're just pushing and pushing their customers. They're, you know, testing their loyalty. Testing loyalty is dangerous, very dangerous game. And I think that at some point Apple will just push it too far, because I don't think they can control themselves. The split second I heard that they were going to remove the charging cable from the box, so you have to buy it separately, I was like, yeah, this is Apple, this is so typical Apple. And at some point, you know, you can only push the customers so far. Let's look at PFSAT. Okay. Pfizer. Oh, PFA, okay. PFA. Okay, so this is Pfizer, this is a healthcare company. As you can see here with this stock behavior, it's very erratic, many cycles, small cycles, up, down, up, down, up, down, up, down. We do have this a bit of a... It's quite clear that the green 50-week moving average is the key level to watch. Try, fail, try, and so basically we want to see the 50-week moving average becoming a support level before we turn bullish here on Pfizer, because it is a key level to watch out, to just keep in mind. Okay, those were some charts to look at. Whatever you do, of course, you don't fight the trend, and may the trend be with you.